What's going on, everybody? It's Lawrence here from Financial Thing for a dose of Thursday peer-to-peer lending chit-chat. Of course, this evening we have Cufflink CEO Narinder Khattoare with us on a day where over 400,000 Starbucks cups have been recalled because of burning and cut risks, and the Dow Jones is almost pushing 40,000 points, but we have more important things to talk about, and that's peer-to-peer lending. If you are new to the channel, please subscribe. We talk a lot about peer-to-peer. We have a ton of great content, interviews with peer-to-peer lending company bosses and also owners. And hit that thumbs up if you can. But we are just going to get right into it. Of course, if you haven't checked out Cufflink before, go check them out. Easy to find. Also, there is a link in the description below too, as the stream is actually sponsored by Cufflink. But we are going to chat about things that I know you want to chat about, which I know Narinder is going to be very forthcoming and open because things do need to be addressed, including the reasons to why they increased the minimum amount that you can invest in loans, and also what's going on with the defaults and the late loans, and how are they addressing those things. So if you just bear with me for a second, I'm going to get Narinder on here, and we are going to talk Cufflink and peer-to-peer lending. So just give me a second. Let's get him on here. Hopefully he answers. It's ringing right now. I know he's going to be here because I spoke to him a couple of minutes ago. This is what happens with live streams. Sometimes they don't go exactly to plan. But I told him. Oh, here we go. There we go. Hi, Narinder. Hey. Yeah, can you turn your video on? There he is. Okay, let's bring you on. You are live, Narinder, here to the Financial Thing audience, and I believe people who are Cufflink investors too, who are really interested to hear from you this evening. First of all, thank you for doing this. It's been, can you believe, 3 years since the last time that we had you on?
Time has flown by.
Doesn't time absolutely fly? It does. But yeah, thanks again for being here. We got a lot of stuff to cover today, peer-to-peer. We're going to talk about Cufflink. We're going to talk about the general state of the peer-to-peer industry and what you guys have going on over at Cufflink, and some of the things I know people are going to want to hear about. So Narinder, give us a quick rundown. Again, you were here mid-2021, I believe it was June or somewhere in that month of 2021. How's Cufflink changed over the last, I put 2 years, but actually 3 years now since 2021. Tell me what's going on over there.
So the team has grown. So there's been quite a few people that we brought into the business. So we had a institutional facility with a tier 2 bank since then as well, and there's a couple made on the platform, minor adjustments which investors are calling. But I think those are the main things there. I think the biggest one to announce was the institutional facility that we signed back in the summer of last year.
Okay, so sorry, your audio is cutting out a little bit. I don't know if it's the AirPods, but hopefully it'll be okay. So you said one of the main things is obviously the institutional facility, and we'll talk about that also because a lot of peer-to-peer companies have been kind of going away from retail and taking on pretty decent size institutional facility amounts. But can I ask you, is there anything that you would have done differently since the pandemic has happened, since that rough time that we had in 2020 to now? If you were looking back and saying, well, if there's one thing I would have done differently or changed with the business, what would that have been?
I think my only frustration was from a business point of view, we didn't introduce enough alternative products. So that was one of my things that I've been trying to introduce into the business and into the sector is a different type of asset class that investors can invest into. So that's probably my biggest regret that we didn't fulfill what I think the business is capable of fulfilling.
Was that just down to resources and not having enough manpower to make those type of things implemented, or was there some other reason? Because I know things take time, right? You have all these things that you want to do, but things take a lot of time, resources to
Yeah,
implement.
yeah. I don't think it was down to resources. I think we just got so busy with lending. So we had a massive uptake on the bridging inquiries. We had a huge uptake on the development loans that we took on during that period as well, right? So the concentration for the team just went purely onto that and fundraising against those kind of assets, right? So it just took us away from looking at any other type of product that we can bring to the market.
Okay. Interest rates are obviously. Oh, by the way, everybody watching out there, if you have questions that you'd like to ask at the end, we can do a quick Q&A. We'll fire off anything interesting to Narinder at the end. But let's talk about interest rates. Obviously, a big talking point at the moment, them being high. Peer-to-peer companies like yourself have been increasing the rates to try to remain competitive with savings accounts that obviously are offering decently attractive rates in the moment in the mid fours. What are the sort of average Cufflink investor rates right now that people are seeing and achieving, and where do you think those investor rates are going to be headed?
Yeah. Uh, I mean, this is a strange one because I remember the last time I came on, and I've said this to quite a few of our investors over the time that we're never going to be one of those peer-to-peer platforms that are going to be offering very high interest rates, right? So the challenge we've had, obviously, the base rate's now at five and a quarter. Investors are looking for a higher rate of return on the investment. So it's not one that we really wanted to do, but we've had to follow suit, right? Otherwise, our investors will be looking at other platforms or alternatives to put their money, right? So recently, we've upped our rates in the pool, so we've adjusted the pool rates, the term of the rates in the pool as well, right? So we've had a 1, 3, and a 5 year term, but most recently we've gone from a 2, 3, and a 5. And the rates vary from anything from 9.6 on a 2 year, 8% on a 2, and then a 7% on a 5. But on the select side, we have offered higher rates there again, once again as well. But yeah, and they have been in double digits, right? So I never thought that we'd be a platform that will be offering double-digit returns to some of our investors, right? But we have done, right? So I think the highest rate we've offered was around the 12% mark on the platform. It might be slightly higher when you compound the interest rate, but that's what we've been doing, and we've had to do that because of the base rate.
Some of the peer-to-peer companies that kind of are in that lower rate area really struggle to know what to offer because people have sometimes looked at it and gone, well, why do I need to take risk for 6% to get 6% back when I can get 4.5% in the bank? At 1.5% is just not going to make or break most people because you're in that sort of higher, a little bit of a higher area. I wouldn't say you're the highest, but some of the rates you offer are definitely more attractive. Let's talk about the loan deal flow. So peer-to-peer is always a demand and supply business, especially on the retail side. And one of the things you have to do is balance having enough retail money coming in to be able to supply the loans. But how have you found the deal flow to be in, say, end of 2023 and now 2024? And have you adjusted at all the lending criteria that you have to screen for borrowers?
Yeah, so as a lender, I mean, I think I mentioned this previous call, and I've said this, before as well. So our inroads into peer-to-peer was different to most of our competitors. So we were a bridge lender before we came into peer-to-peer lending. So we've always been in the industry, so we've always been very good at originating loans. So we've had a very good relationship with brokers up and down the country, whether they're a one-man band or they're a big pack, right? So we've already had those kind of relationships before we came into the peer-to-peer space. So the deal flow itself is it's always been great. The challenge we always have is managing. So I totally believe this, and I've spoken to some of our competitors over the years, and there's a seesaw effect, right, in the industry, right? So sometimes you have far too much inquiries coming through to fund on the platform, and then sometimes you have far too much money coming through, and to get that balance is very difficult, and as a platform, it's a challenge, but we've always been very good at originating deals.
So the number one question that I've been having recently about Cufflink is how the loans actually been performing, because there are some challenges I know, and you've been kind of forthright with me about some of the challenges you face with some of the loans that have been delayed with repayment and loans that may be performing not the way you'd like them to. Can you address everybody just to kind of let's address the elephant in the room right when it comes to that? What is going on with those loans and those loan performances?
Yeah. I mean, this yourself, right? You've invested in a number of platforms, and from my experience, any person you lend money to, especially in this industry, there's a loan end date, right? No one pays on time. They either pay you early or they pay you late. And particularly when it comes to development loans, they've been more challenging, over the years. So there's been this significant events that have happened in the world, over the last few years. You've had, wars that are going on at this moment in time. You've got interest rate hikes, the cost of material going through the roof. Developers have found it hard, and as have investors are going to be frustrated, right? They put their hard-earned money into deals which they're hoping to get a return on, which they are, and they want their money back on time. So I feel the pain, right? So I've invested in some of the loans personally myself, and it's a journey that we all have to go on together. And I've had a number of conversations with individual investors and said, look, I've put a substantial amount of loans into a particular development loan. The challenge you have there is this, right? So if we wanted to, as a lender, we can step in, right? If there's a part-built development, it makes no commercial sense for us as a lender to step in, because that comes with its own challenges. We'll have to find a contractor that can go in and finish the part-built development. Contractors don't want to work with somebody else who have been building, the development, in the past. They want to start from scratch. That incurs more fees. There's more delays with these kind of loans. So all I can say to investors is that we've got a very, very, very good team, right, that manage these loans. Yes, it's been a bit frustrating. It's taking longer, and I know there's loans there that have been going on for an extra 6, in some cases 12 months, in some cases a little bit more. I'm confident, the team that we have and the people that we're working with, that these developments will come to fruition. They will exit. There's nothing currently that we're working through that we're concerned as a business. We're frustrated as our investors that we want to get these over the line. And all I can say to investors is, look, thank you for your support. And I feel, where you guys are coming from, but just, you've got to believe, look at our track record as a business. I think over the years, we've been very good. The whole industry, the whole country, the world has been going through a challenging period. And I do believe that there's light at the end of the tunnel with these loans, and they're coming towards the end. I mean, I had an email earlier today, and I know I look at the forums myself, Lawrence. I do read it, right? And you get a bit obsessed with these sometimes, and sometimes you're reading them at night and you have to turn them off, and then you're like, but I know what is going on behind the scenes. But on one of those particular loans, we had a good update from one of them today. They've all pretty much been sold. I think there's only about 3 or 4 units that need to be finished on a particular site, but they're pretty much sold, right? So we're going through a little period where they've got to be sold and the money comes through, and then we can pay back our investors. But the most important thing for us as a lender and as a team is to protect our investors' money, and to make sure that their money gets back to them. It doesn't always happen on time. That's the most frustrating thing, right? And that's why you have a secondary market. where people can exit. Some people don't want to go in it because they have to pay fees. I totally appreciate that. But as a business, myself, I've spoken to a lot of high net worth individuals that invest on our platform, but we've got a fantastic team there that the guys can ring in and talk to. And one of my frustrations is from my side is I think our comms can be better, to our investors, to give them a bit more of a detailed analysis of what's going on. But then where do you draw the line, right? So you can give them far too much information, which then they can start going on the forums and commenting more about it and say, so and so said this, and where is this actually really going to end up? So it's you have to draw the line somewhere. But I've as a CEO of the business, I'm very confident that these guys will pay, and no one's going to make any losses on those loans. I'm very confident the same.
Mm-hmm. Okay, well, thank you for explaining that. And personally myself, I've been involved in real estate, so I've been on both sides of the fence. I've done real estate deals, and I've been a peer-to-peer lending investor, so I get to see both sides of it. And real estate developments are actually incredibly complicated. Just especially if you have something big and you're trying to fit all these pieces in. Contractors are never on time, very rarely. Everything is usually late. And I think I've become a little bit more thick-skinned to knowing that things are going to take more time than we originally think they're going to take. I will say one thing, though, that I think transparency is really important. Some people do want to hear about at least something to know what's going on. I think they get nervous when things go a little bit dark, because every problem that we've had in peer-to-peer with companies that have had real big problems have been when they go dark and you just don't hear enough about what's going on behind the scenes. And so these
I think sorry from our side, I think we're just waiting to hear back from the relevant parties, right? And the challenge is getting hold of the individuals, to provide their feedback to. We can only provide feedback to our investors if we've actually heard from the developer and the contractors themselves. And we've done a site visit, right? So we have asset managers that go on site, and we like to get a detailed analysis of what's going on. So they'll be on site for a number of days, working with the contractors and the developer to find out exactly what's going on. So sometimes that takes a little bit longer, but I totally feel it, and transparency is key.
And so, Narinder, one of the things I think attracted people and still does attract is that you guys put money into the loans yourselves. The old skin in the game. Do you still do that now?
Yeah, we do. Not as much as we have done previously, and that's shrunk over the period of time. When we first came out, we was doing 20% skin in the game. That lowered down to 5%. But we only put in money into deals that are over 65% loan to value. But we do also we always put money into development loans, right? Because they're a bit more higher risk. So we're always putting money towards those. Anything over 65% loan to value is where we put up to 5%.
And what is the reasoning for putting the money into the 65% plus LTV loans?
I mean, I personally think even 70% loan to value is not a great deal of high risk in this industry. It's a short-term deal, and that's why we think from the feedback we've had from investors, and they've said they feel that we should put some sort of money into these deals, because a 65% loan to value seems as a bit more high risk. But personally, I think if you did anything over 75-80%, that's really high risk. 70% is the norm in the industry where people borrow up to. So we thought that 65% is the figure that we should go to, where anything below 65% is for me, I think I can't say it's low risk, but there's always an element of risk involved in any form of investment. But that's the number that we've worked with.
Okay.
Fed back to us. They've said 65%.
Okay. And Narinder, so the other contentious issue that you've had within I think, gosh, it seems like it wasn't that long ago, it's probably been a year now or more, was this raising of the minimum loan rates. I think I heard more about that than anything. Obviously, it affected certain people, especially your smaller investors who don't want to put in. You raised it to £500, I think, for new investors, and was it £500 per loan? What was the thought process behind doing that, and is that something you're going to continue with, or have you thought about maybe changing it or lowering it a little bit?
Yeah, I think what we're looking at doing is, we've looked at a number of our competitors where they are. I mean, there's some that look at 10 grand, £20,000 investments, and some will start with, I think, minimum as 10. Um, the FCA are making it a lot harder, with this the retail space as well. So what we're trying to work on is a £500 commitment from an investor, you know, hard for some to put in, and we want to give an opportunity to all of our investors to put money in. We looked at what the average loan size was. We've looked at what the average investment size was. We've looked at, who these people are, and we just felt that there's a demographic, that we don't want to neglect, right? I don't want people to sit there and think that we're going to neglect these. We don't want to neglect them, but the time and resource that we have to spend as a business, on some of the smaller type of investments, it's difficult and it's more tricky with the FCA. It takes, and we can't fill the loans, at times with some of these guys. And I'd appreciate, look, we've grown our book over a period of time, and we've entered this industry, and we've done over 320 million pounds worth of investment platform, and we couldn't have done it without any one of these, and whether it's somebody on the smaller end or somebody's on the bigger end. But what we're looking at, where we're trying to get to, we feel that working with a core group of investors will help us achieve our targets going forward, and less challenges facing from a regulatory point of view.
How difficult is it actually managing, smaller investment amounts? Because I would imagine some of it has to be done manually, right? It's not all automated.
Yeah. There's
How
time,
difficult is
resource.
it?
It's not easy for me to quantify exactly how difficult it is, but I just look at it from the amount of hours that we spend from uh, internal point of view, the time, the resource that goes towards it. It takes hours, for a small investment. You're looking to onboard a new investor. You've got the APT test, and there's, people are struggling to get through, and they're asking us a number of questions, and obviously we can't advise on how to get through an APT test, right? That's something that they have to do themselves, and and then you think, the industry is growing, with high net worth individuals that are coming into it. So, as a business, that's why we've thought, it's better for us to look. When we've upped here, I don't think we've upped here by a huge amount. I know before it was £100, right? So the new investor coming in, is they'll have to put in £1,000, but any reinvestments thereafter, it's £500. We don't think it's that much of a big jump. I mean, if we went from £100 to £5,000, that's a huge jump, right? We wipe out a lot of our investors, and we can't do that. And we're not planning to up that anytime soon. I'm not saying that we're not going to up it again, but there is no plans. There's nothing that we've discussed internally. We think that where we are at the moment, with a new investment, of £1,000 and reinvestment, the people that are currently in to £500 is probably about right where we should.
Just circling back to the communication and transparency, I've read some of the forum chitter chatter about that. Obviously, there is a line where you have to draw, where you can't give too much information because it's too much, and then giving not enough. Is there some kind of middle ground maybe that you can look at to make it a little bit better for the people out there that are really wondering about what's going on with these loans, just to address it and maybe tweak it a little bit to make it somewhat better, if you are finding a lot of people that are saying, well, I don't think it's transparent enough?
I'm just trying to. I think that we're probably talking about 4 or 5 loans, right? That's what we're talking about.
Mm-hmm.
I think we had a meeting earlier this week with the team where I did say, look, we need to work on a strategy where we can be a little bit more transparent behind the scenes. So that is something that we are working on. So I think the comms over the next few months will get so much better. There'll be more information that we get provided to investors. But like I said, there's only so much we can give, with all GDPR and with all the other red tape around it. There's only so much we can give, and we will try our best to provide more transparency and more clarity around these loans. But I think the majority of the ones that we've been talking about, I think within the next number of months, and I mean, so I could see them within the next 6 months, they're going to be due to be paying back anyway, and we're quite confident that they'll pay back into wallets over that period, because we can already see those guys coming through.
Okay. Just a quick interim. If you're enjoying this content, Narinder has graciously given us his time, and I know he's sweating a little bit because some of these things are not particularly fun things to answer. But hit that like button. Let other people know about the video that is going on right now in the live stream. It takes a second to do, and it's very helpful for the stream. Let's talk about Cufflink as a business. Obviously, companies need to make a profit to roll on. We've seen a lot of companies that have not made a profit in many, many, many years. How is Cufflink doing as a business? Have you guys been able to reach that profitable line, and is it going to continue that way, do you think?
Yeah, so over the last, I think when we last done, right? So we have been profitable as a business. So in 21, 22, and June 23. So our accounts always have been independently audited. So in June 21, we showed a profit as a business. That was, I think, it was about 460,000 profit. June 22 showed around 700 odd, and the last set of filed accounts in June 23, we showed a 1.8 million pound profit. We're currently profitable as a business right now as we speak, and I think profitability will continue. Where it will end up in June 23, I mean, I couldn't answer that question. Are we going to be profitable? I'm pretty comfortable in saying that we are going to be profitable. There's a lot of money that we spent, prior to 20. We had spent towards marketing, getting the brand awareness out there, and I think that's worked wonders for us as a business. So what we're trying to do is, wherever we can streamline, we try our best, and we're trying to earn a better margin as we possibly can. But then we also need to understand that we have to have affordable rates that our borrowers can afford to pay us back on, and there's rates that are attractive enough for investors to put money into. So there is a margin that we do make in there, but as a business, we are profitable.
Okay, good. Let's talk about the peer-to-peer lending sector. I've said this to a couple of people that own companies, that I think we're in this sort of stagnant period where we're just not seeing any new companies really enter into the space. I know the FCA is making it quite difficult, putting a lot of restrictions on things like advertising, and also giving licensing to new companies coming into the space. What do you think about the general sector of peer-to-peer and how it is now compared maybe to a few years ago? Do you think it's better now, or is it worse? Are we heading into a growth period, or is it just kind of going along baseline?
Yeah, is the sector growing? No. Is it shrinking? Not really. And I agree with you, it's quite stagnant, right? I speak to quite a few of our competitors, and I think there's a group of us, in the property lending space that are doing good things, right? And long may it continue. Do I see more people coming in? I don't think they will. It's a difficult industry to get into, right? They, like you said, with the restrictions with the FCA, the expertise you need in this industry as well. I mean, I think the casualties we had here were, in the last few years, there was people that were not really, experts in this industry, who didn't really know how the industry really worked, and they thought they can probably make a quick buck in this industry, and it's easy. It's not, right? So you're having to manage this, and in management, and you need the expertise in house, and a good team. And thankfully we've got a great team, right? And I can speak for other lenders that we compete against. They've got some fantastic individuals running these businesses as well, right? And I mean, I don't think there will be any consolidations this year. I think we've spoken about this previously, with other with other competitors that consolidate. I don't see that happening. I don't see other people coming in. I think the people that are here, they will just grow, and they're doing good things.
And there is also only so much money to go around. So maybe the fact of less competition is actually not such a bad thing, where the companies that are doing the right things can actually attract more of that money that's already in the sector. So we'll see what happens. What do you think about a lot of these companies closing their doors to retail in favor of taking on just huge institutional lines of money? What is Cufflink's stance on that? Do you think you're going to continue to service retail or do a mix of both? Obviously, because you have the institutional line.
Yeah. So for us as a business, I don't think we'll ever close that retail side of the business down because, if you pop the institutional facility that we have, they weren't there for us from day one, right? So it's these, these investors that have supported the business with their hard-earned money over the past, was it 2016 to where we are now, these 7-8 years, which they've supported. So, we would never walk away from the industry. I think, we can balance the two. There'll be enough opportunities for investors to invest on our platform. And there's enough deal flow coming through that we can satisfy the institutional facility as well. The challenge we have is, when we're trying to fund deals, it's not as easy as it has been in the past. Trying to fill these deals with just pure retail investors, and we see that. If you take example like a development loan, the investors will come in, on the first tranche and the second tranche, and then if you've got 15 tranches, they don't want to put money towards tranche 4 all the way up to tranche 15, and that's a challenge, right? So that's when, as a business, you have to bring in put more of your cash into that, and that's a massive challenge for a business like ourselves, and that's why we thought, look, that's why we have to go down that institutional route, that can complement the platform. There's a certain type of deal that works, that funds well on these platforms, and there's a certain type of deal that just doesn't work, right? And we know that, and that's why we thought, it's better to have the two together. We don't mix the two. We can't mix the two. They're two separate facilities we have, two separate entities that we have. But we're very much committed to the retail sector.
Okay, I'm sure people will be really happy to hear that. So 2024 obviously has some challenges with these continued high interest rates. UK definitely still has that lack of affordable housing. So what opportunities do you see for 2024 within your space?
Development loans is definitely still one. We just haven't got enough properties in the UK, right? We're in this island. We need to build. The population is growing. So we need. I think development is definitely opportunity, as is MES funding as well. So the two itself, I think, for the next 12, 18 months, some huge opportunities. I mean, I've spoken to a lot of borrowers in the past that have been land banking, waiting for the cost of materials to come down, which they have. Inflation, announced yesterday. You can see the inflation figures have come down. The base rate has been held at 5.25 today, but future announcements look like as if the rate is going to drop later on this year. So that gives a bit of, well, right now what we've got is that stability, right? So if we've had no rate change for the last, I think it was the last 4 or 5, that shows there's stability now in the market. So people are now going to start coming out, wanting to do more. The developments, we've seen an influx, or I wouldn't say a massive influx, but we've seen an increase of development inquiries that are coming through. We ourselves are exploring, looking at MES back, because there's just opportunities, that will present itself, and for investors going forward as well. So I think they're the two big things here, especially in development and mezzanine lending.
And do you have anything that you want to share, maybe about Cufflink's, any future plans that you have, any maybe new products that you're working on, or things that investors might be interested in? And what does the future look like for Cufflink?
There's quite a few big things that we are working on behind the scenes, right? So there's only so many things I can say. I think to the investors, what I would like to say is just be prepared to see a few different types of asset classes and different type of loans that we will present on the platform. For myself, I've always been an advocate of SME type loans, right? But SME loans done properly. I know there's a lot of some back and and in the alternative lending space that have gone in the SME market space, seeing an opportunity to lend, but at a higher rate of interest. But I think if you do it right, there's some serious growth in that space where you're helping the UK economy with the SMEs. So when I mean SME, I'm not talking about like SME developers, right? I'm talking about true SME lending. And that's always been one of my things that I've always wanted to bring to market. So I think that's at some stage that is one of the products that we probably will bring. And smaller type loans. I mean, I can't elaborate on what that smaller type loan looks like, but smaller loans rather than the bigger stuff that we've been doing in terms of the bridge and the development stuff, which then allows investors to diversify, right? So the key thing for me is an investor should be able to come on our platform. They should be able to diversify. Not only are they putting deals into individual deals, they're not only putting deals into an auto invest pool, but they can diversify against a different kind of asset class. Because I truly believe that investors are using us, but we're only getting one third of their wealth because they only want to deploy one third of their wealth towards real estate lending, right? So they will look at other avenues with different type of asset class, and that's what I think later on this year we will have that. We will be able to provide that for our investors.
You may be only the one peer-to-peer company that has been able to do that successfully, because a lot of the other ones that have tried to lend with SME have really struggled. I think one of the biggest issues is quantifying risk when you're lending to businesses. So it'd be interesting to see if you are able to make that one work. Maybe you'd be the first.
The team that they have been, that we've started conversations, right? And if I've got quite negative, but not negative, but it probably sound wrong. But if I've got two of our more pessimistic, negative thinking people who are confident, gives me a great degree of confidence in this as well, right? And these guys are seeing opportunities, and that makes me think, right, well, if they can see it, well, I can see it anyway. If they can see it, why not, right? And they are those ones that really go through it with a fine tooth comb. They really look at the detail, right? And they're investors themselves, right? And they're very cautious, but they're confident. So that gives me some confidence, and that the team, like I said, I keep going, but I've mentioned this earlier as well, but the team that we've got is fantastic. I mean, that team is the core team, have been there for a good 6-7 years now, and we all understand each other. We understand our weaknesses, but together as a team, there's a team of a tight unit. When we all get together, we all have a different hat on, right? One's very negative but very anti, one's very high risk, but collectively, we make the right decision.
I think you must be talking about Heron, your risk officer.
I'm not going to mention. I'm not going to mention any names.
He should be. He should be pessimistic. That's the guy you need to really be looking at everything with a fine tooth comb.
It's not just a particular individual.
I know.
I mean, we've got a fantastic team. I mean, you've come down to the office, and there's a group of individuals that have been there for a while, and they've been absolutely fantastic and very loyal to the business.
Mm-hmm. Yeah, and if everybody watching out there, if you haven't seen the video I have on my channel about when I visited Cufflink's offices the last time a few months ago, go check it out. It's pretty interesting. They even have a table tennis table in there, and some people are a lot better at it than others. Do you still offer ice cream, by the way, to your investors? Can they come and get free ice cream or what?
No, we don't, unfortunately, because when you said the first question is how have we changed, I'll tell you, I've changed because I've put on a lot of weight since that time, and I've lost some hair. So no, there's no ice cream now, unfortunately, in the office, and the table tennis has gone as well. It's probably why I've put on a bit of weight.
You got it backwards. You should have gotten rid of the ice cream and kept the table tennis.
Yeah.
Oh, well, what are you going to do? Okay, so we've been on for about 40 minutes. I know I said I wouldn't take up too much of your time. We just got a couple of questions and comments that I think are pretty interesting. I'll just fire off a couple at you. Hang on one second. Let's put them up on the screen. Rodney Buckland asked, is sponsoring Ebbs Fleet United good for Cufflink's brand? Maybe he's saying you should sponsor Liverpool. I don't know what that means, but has that been a good move for you?
Brand awareness wise, I would say yes, it's been good. Actual return on investment, question.
Questionable. How is the team doing? Are they doing well?
If I haven't really been following them of late. I've been off football. I mean, I've not been following them. I think they were struggling. I think there's a chance that they may be getting relegated to the Southern Division at the end of the season. They're not that far off the relegation zone.
No, they can't be worse than Grimsby Town or Wrexham, right? So let's see what else. Mr. Heliums has asked. He'd like to know what happens to the 1 year investment on the auto lend.
So we thought we never offered a 2 year option originally. So we thought we'll trial how the 2 year investments work. We've had a good uptake on that as well. But I think the 1 year investment at some point later in the future will come back in again as well. But what we're trying to do is get money in for a longer period of time rather than have a commitment, in 12 months' time. So we're just testing. It's not there for the long term. So, I think that will come back at a later stage.
Okay. And let's see if there's anything else here. Dave Allard has asked, does Cufflink get repeat custom from borrowers? Do you tend to get the same people coming back more than once, or they tend to be one and done people?
We've had the odd one or two. They don't tend to, I think one or two that have literally come back. If the broker's done their good job, they will refinance it away with another lender. But yeah, you've probably had a handful.
A comment here, Jem F from South Yorkshire, welcome, home of the best tea in England, maybe Yorkshire tea. The minimum investment actually pushed me into auto lending, but then a loan repage yesterday I discovered that auto lending had no availability. How does that get balanced with the auto lend? Just for people that maybe don't know how auto lend works, who gets the priority? Is it the auto lend? Is it a percentage goes to auto lend and to manual? How does that work?
So at the moment, there's no availability because what we're trying to do is lend some money out, so we can put that available in the pool. So people can load their wallets up, and I do think that we'll have some availability in the pool at some point next week. But there's no way that they can put anything, or there's no queuing system at this moment in time where they can, allocate their money into the auto pool. But there is a few things that we're working on behind the scenes which could rectify that. It's almost like a reserve functionality where what we do on select. So there will be something like that coming forward business to the next two.
Okay, cool. I think that's probably going to do it. Does you have anything else you'd like to tell the internet out there about Cufflink and why they should come check you out and give you a try?
Yeah, one thing which I want to say is that thank you to all the investors that they've supported us over these years. I know there's been a bit of a challenging period that we've gone through some of these loans that have overrun and significantly overrun in some cases. Look, continue to support us. We've got a great team. We're always a phone call away if you really are, having a difficult period where you want a bit more information. We've got a fantastic investor relations team that can provide that information over the phone if you need some sort of support. But I really have some faith in the team that we're going to get out of these loans that are currently sitting in default, and they will pay back over the next few months. But I just want to say thank you. Keep supporting us. There's some good stuff coming from us as a business going forward. We've got a great team. There's going to be some extra different types of products which they can diversify their funds on. But main thing is, thank you to all the investors.
Okay, well, thank you for taking your time to come and put yourself out there like that. It's easy when things are going perfectly. It's easy to sit up here, but when you have challenges, the hard thing is coming out here and facing those questions and being transparent. And you and I have had a relationship for quite a number of years, so I hope you'll be able to take care of these issues, and the investors will be happy, and everybody wins, right? And most importantly, the developers win too, because we want them to complete. That's the last thing you want, is to see them fail. So everybody wins if it all goes the right way. So thank you very much. Hopefully we'll have you back on relatively sooner rather than later, not another 3 years again. So appreciate you, and thanks again.
Thank you. Cheers, Lawrence.
Okay. Bye-bye.
Bye.
So there you have it. I think the questions were answered pretty well, and proof is in the pudding, as they say, right? We can hear everything we need to hear, but proof is in the pudding. I think Cufflink has done generally a good job in this sector. Look, you have to understand something. What these guys are doing with this lending business is not easy. It's not easy work. If you've ever been in the lending business, it is very difficult to keep up with all of these things, but they do have a really good team. And again, go watch the video that I have posted on the channel that shows the visit to Cufflink. You'll get a behind the scenes look, and also you get to meet some of the people that are in the positions, for instance, risk and writing the business. I have an interview on the channel from Paul Orga, I think that's how you say his name, and then Hiren Patel, who is the risk manager. Some really informative things, and get to know the business. There are people out there that don't really know these businesses, and they post comments and things, but get to know the people that are running the businesses, and just become informed. And also, it's never wrong to keep an eye on what's going on. I think you're right to do that, and we'll see what happens. I've gotten quite a few emails this week about if I could give a trading 212 update. So I'll just go ahead and do that, and then we'll get out of here. Also have invited Mike Bristow from Crowd Property to be here. I'm hoping he's going to be here early March and maybe the first week of March, so he can come and sort of answer some of the questions that have been going on about Crowd Property, because there are some people with some concerns. But let's take a quick look at the Trading 212 portfolio and see what's going on. There we go. Is that showing? I don't know if that's showing or not. Hold on. No, it doesn't seem to be showing. Hold on. Let me see if I can fix this little tech issue. For some reason it's hang on. Firefox. Here we go. Got that right there. You can see here account value now pushed over 20,000, 20,758, which means to be able to give some more money to our charitable causes. That has always been one of the things that's important about this portfolio. What has been the winner here? Definitely not Alibaba. Has been coming back a little bit, but things over in China not going so well. Coinbase, obviously tied to Bitcoin, now over 104% in the green. And then we made a bit of a gamble yesterday, Creative Realities, that did earnings today, and I thought this stock was going to really take off. I don't know if you remember that this stock was restricted on Trading 212, meaning that you were only able to purchase a small amount. I don't know why, but I tried to buy more yesterday. It actually worked. Lucky I didn't buy too much, because that has had a really roller coaster of a day. You can see here from opening, when they actually released the best earnings, the best profit the company's ever had. For some reason, the stock market, being the little playful character that it is, didn't like it and went down about 14%, and then bounced back up over here, and then bounced back down and ended about 6%, almost 7% in the close. Valco Energy has done well, so that's kind of pushed the portfolio up a little bit higher, and Vermilion Energy just continues to be a drain. So yeah, the portfolio is definitely heading in the right direction. The new goal, I mean, this was at about 17,000 just a few weeks ago. The new goal is to get to 21, then 22. But we are pretty heavy in cash at the moment. About 8,700 pounds in cash. So just trying to see those opportunities that come where to actually deploy those funds at the moment. I'm not really seeing them, but we'll see what happens in the future. But anyway, thank you to everybody for joining. Please subscribe if you're not subscribed. And thank you to Narinder again for taking his time. Thank you to everybody that's tuned in. If you're new to the channel, come back every week. We have a lot of good peer-to-peer lending investing content, and check out the videos that are on the channel. And for myself and our mascot, Harley the Wiener Dachshund, we will see you next time. Thanks for joining. Take care. Bye.